Hello, everyone. Happy Turnaround Tuesday. Well, we'll see. We got some potential bottoming patterns. It's gonna be looking for a short-term bottom. Good morning, Sterling. With Sterling in here with all the news. Let's see. Yeah, I saw that. Chase UK to block crypto payments. Oh, there's fraud in crypto? Are you kidding me? What? What? I didn't see that one. That's probably good for Apple since there's iPhone 15 or whatever 15 sales will be lackluster. Good morning, options 22. What else do we have? Japan's, yeah, I was gonna. Hey, we hit the 87 and a half, the 87 and a half rule, but it's also in very. Now that we've hit this, we're in prior intervention area with the yen. So I learned some of these simple rules. Trading does not have to be super complex. It's challenging enough as it is, and if you have too many complex rules, it makes it even more. It makes it even more tough. Like my grammar, more tough. Uh, hey, Royal Palms. Good morning, Connor. So, rounding to. Hey, you're rounding 435 to 438. I take it. What are we talking about? The spiders? We'll get to that. I'm looking for a rally today. I'm looking for a rally. I'm looking for a short-term bounce. Looking for a short-term bounce. We had building permits come out earlier in case show our home prices. Consumer confidence coming out at 9 a.m. Forecast to be slightly down from previous, so I'm going to pay attention to that at 9 a.m. New home sales, home sales not much. Then we got Richmond Fed Services Manufacturing, a small regional index, but it'll be interesting to see. Services still forecast to be in expansion slightly. Everything else in contraction. So watch out for that too. Dallas services were in contraction last month. Forecast to be more in contraction. So keep an eye out. That's at 9:30 Central. And then we got Bowman speaking. But overall, a quiet day. The heat map so far, we got some weakness in meta caps. I looked at meta because the double bottom is still in play after hitting the first target in meta and then pulling back. But the rest of the mega caps pretty weak. Oil weak. Dollar looking very, very toppy now, and oil continuing a channeling pullback. So let's see if these mega caps can get a bounce into the open. You see here, let me just refresh super quick. Everything negative at this point, which means we'll probably bounce in the open. But healthcare, utilities, consumer defensive, so slight rotation into consumer defensive, but we'll see if that holds up into the open or not. Energy leading the pullback, comm services and technology, but I'm going to be keeping an eye on those mega caps going in the open. Fed Watch tool still at pause through June. Fear and greed still in fear mode. All right, good morning, Jacob. How did going from 0 to 5? Didn't they? I mean, this is absurd. Come on, they telegraphed this. It's not like they went from 5% overnight. I'm just so. Forget it. After the close today, Costco. After close tomorrow, Micron. So Costco, the only thing, but that won't really be market moving. It'll be interesting in relation to the retail and how the consumer's holding up and what Costco sees for prices and any price cuts or inflation with price increases. So I'm going to be paying attention to that aspect of it. So that's where we sit right there. Here I got Meta up. Look, the double still after hitting. This is not a double bottom. This is a two bottom on the 50% retracement after hitting the first target. What I'm really watching for is got to get through this really nice declining trend line. No double bottom because it's not reversing enough of the move. But if it can get through that trend line, then the first target would be, again, the 311 area. But still holding up against that 50% 50% harmonic. So we're done with that. All right. We do have a little mini double on the 4-hour time frame. Would need a break above 43.8350 with a follow through 4-hour close to trigger. So Even if we pull back a little in the open, you can see we have some fair amount of buying pressure. There's a fair amount of buying pressure. Now, if we do break through the open, the next key level is this 43.27 area. 43.27. 43.27 looks like it's right at the potential invalidation point. It might keep the double in play if we get down there close. What's the exact level? 43.28 for the harmonic. So if it hits 43.28, the double's still safe. If it hits 43.27, I think it's invalidated. But I'll be keeping an eye on this going into the open. And what does that mean? If this double does trigger, it means you could potentially get a return to the rotation zone and the prior major support area becoming resistance. When I say support area, you also have a low close right here. So you can see the final target would put it in there, but I'd really be focused on the first and second targets because it could even roll over right there. That's if it does trigger. So is this for new highs? No, it's not. It would have to make something more substantial or get a run on. Now, it is into a daily clear path move, but we have the rotation zone, which remember we watch for rotations back down in that because that's the probability area that we get rotations. So again, I'd be focusing more on a short-term bounce with daily cycles turning up. Weekly cycles getting to a bottoming area. Also on the weekly, holding against the 50-week. Very key area. So that's what I'm watching for. NASDAQ, by the way, technically, this is not a double. Why do I have the targets on there? Because it's into a clear path move and there aren't a lot of great targets. So this technically, due to this, it's almost on the verge. I'm still going to use the targets if it does get a close above 14,955.75. I will still use the targets because I don't have any better targets. Okay? That's why it's on there. And you see right around here trying, this is where it was buying pressure from the middle of August and yesterday, trying to see how this holds up. So far, a little weakness into the open. We saw a lot of those tech mega caps are still down. But if this starts trending up, we'll get another tail left behind, and this would be a bounce into the rotation zone. And look, even with this clear path move upwards, the key, even if it got a little stronger bounce, it was a multi-day bounce, you have the top of the rotation zone and the 50-day rolling over. So if we break down, I didn't do that for the S&P besides that 44.28, the next key level, if you don't get turned around Tuesday today, because you got to plan on anything, that's why you wait till the patterns at least trigger, or unless you have a front run pattern, because you don't just go, oh, there's a potential pattern, it's turn around Tuesday, I think I'll buy it. No. Wait for something. Wait, if you have something that triggers a buy signal, then at least wait for that. Just don't go, well, I thought it would go up. It's not a trade strategy. You got to have a strategy. Now, we break through that 43.28 area, the key area, if we keep getting the selling pressure. And this is where I'm really watching. If we do push down, I'll really be watching for some kind of substantial bounce around 4,300 where we have the 200. So those are the key levels I'm watching. And remember, longer term, we've triggered this really sloppy head and shoulders. So longer term, even after a bounce, if it happens today or this week, we should still get the rollover to lower levels. And I would be shocked if we did not test this 200 within the next little while. NASDAQ, we also have the sloppy. This is channeling, though. I'm just looking at these targets to the downside. I will be surprised if we don't reconnect with this 200 overall. But today, my next major target is, if we have a lot of weakness, 14,622. Okay, the minor target would be these little reverse harmonics, which would give me minor target would be about 14,672 to about 14,700. Dow, you do still hanging on by a skin of its teeth. A little, this is a proper double, but it would need a trade and then a close above 34,300. The Dow, the key levels lower, right around 33,900 and then 33,809. Russell, also Little mini double. Remember, just because there's little mini doubles in a lot of markets does not mean they have to trigger. But if they do trigger, potential bounces. 1804.6 is the trigger point. So that would potentially take us to about 1826 area into the rotation zone. And this would be one of the last ones I'd be looking to play to the long side, just because I'd be looking to the S&P first, maybe the Dow second, NASDAQ because it's not incredibly well formed. But the Russell, because it's been the weak sauce, I'm looking. This would be something I'd be looking for these targets to set up for another short rollover. NASDAQ's also against some very key. You can see here all the buying pressure in here. We're right around that area. VIX, VIXY, double top, potential double top. So watch for this. If this collapses within today or tomorrow and gets a close below 1679, 4-hour basis, we could maybe watch for a little more sustained bounce with a pullback. But that would literally keep it still recently elevated. The DAX, still with the weakness hitting the next harmonic area. So what do we have now? Not much. Let's just go to the DAX on any bounce. We don't have a solid bottoming pattern yet, but the key resistance is coming in about 15.5 to 15.520. The next key area is lower. There is a fair amount of support at about 15.250, 265. So pay attention to right down there, which is a pretty key support area. On further weakness, I'd be watching for at least a short-term bounce there. The notes, trying to put in a little bottom here. Already come up. Rotation zone, chipping away at the 4-hour rotation zone now. So if it starts breaking through about 108.16, going to watch for the slight correction move into the daily rotation zone in the notes. In terms of the yield being the inverse to the notes, watching for a slight bounce and then a potential rollover play. You take out 448. We'll watch for the bigger pullback into the yields. But it would still just be a pullback into the daily rotation zone. The first level support is about 4.43, and then we'd be looking at roughly about 4.36. In terms of the 10-2 bear steepening, little pause after a pretty strong up move yesterday, so would not be surprised to at least see his pause or slightly pull back. Nothing much to talk about there. Dollar index continuing its bull run. Yesterday's close right above the key harmonic and the close above these two tops. So it's getting toppy with cycles on the daily at the top, cycles at the weekly pinned to the top. Almost in overbought, so I'll be watching. Key support there is about 105. But still looking toppy. The crude is flagging into the daily rotation zone. Also, crude is trying to roll over on the weekly. So we could easily see a bigger pullback at least to 86.50, 87 area, if not 86. There's not an aggressive setup just yet. I'd be cautious on crude, especially with the dollar weakening a bit. Gold, nothing. Gold is now triple bottom territory. So really, I'm watching to see if we break 1914. And then if we do, 1882 could be in play. 10 years for Japan. Still holding up the yield. Now the yen. Here we go. Talked about this. How long? How long's it been? Looking for 148.85, which has been hit. What I'm talking about with the yen, we have weekly cycles at the top. We are in prior intervention territory. So, personally, from a trailing standpoint, I'd be looking to be more aggressive with a trailing stop now, especially also with the Bank of Japan comments. But does it mean you just bail on everything? It hit a key target. I probably wouldn't bail on everything, but I know where my stop would be if trading the yen from the long side. Euro, trying to put in a little short-term bottom down here, no little double down here. It really has to start getting above about 106.20 before it could get some traction. Multi-weeks down in the Euro, you see there, and days. It's running out of some momentum down here, so I would not be surprised to see Euro. If I was looking to play something to the long side, Euro would be the one that I'd be looking at first for a short-term bounce and then a rollover play. The pound has been very, very weak. The pound actually trading in a minor support area, but this would be I would not be looking at the pound to play the long side. Spiders and the Qs. Now remember, and I hate using pre-market data, what I would look for, we can roughly figure out. This is why, even if you're trading the spiders and Qs only, I'd still monitor the mini contracts for the futures. 429.28, 429.61 is the 75% harmonic. So this will be. It looks like it will be. If it opens down here, it's going to be a potential double. I'd use the right side. The right side. We don't know where that's going to be yet, so I'm putting it on the left side. Just to give you an idea. To give everybody an idea. But the high is not going to change. It would need 432.27. And that would be for a more potentially sustained bounce. Look at this. It takes it to the potential area of that gap open from last Thursday. So, with the daily cycles at the bottom, weekly cycles still trying to head down with the daily cycles at the bottom. So that could be the bigger area. So, and then anything else would be shorter term if there's a front run pattern to that. I don't have the setup I can put on here for anything. But that's where that sits. So this could be a potential, even though you don't see it yet, a potential double. That's why if I see something in the in the S&P or the NASDAQ or the Dow for the diamonds, we can still assess it. We can still assess it in the spiders and the Qs and the diamonds and see. So that's why I'm doing that with the pre-market data. For here, the Qs would have to be below 356.87. We're still trading above that. So you need some further weakness in the Qs after the open. Okay? That's your magic thing. I'll just put this on even though we're not there. I'm just going to put this on in case it does pull back. Where would that take us? If that did trigger, and again, this might not be valid at all as a double pattern. If it is valid, it doesn't even take us back to the daily rotation zone or even the prior key close. That does not mean that gap could still not be filled. The double just wouldn't take it there. It needs some continuing strength after the double. So keep an eye on that if you're the Q player. Now, if it does roll over, major support 355. You start breaking 355, about 351 is the next level. And on the spiders, I didn't do the targets below. 427.85 and 426.40 are the targets. Tesla. Key level to watch from the close is still 237.34. Remember, it's going to be weekly delivery or quarterly deliveries coming up after the end of this month. Still on any play, I'd be watching for the rollover, especially if it gets a close below 237.34. There'd be a short-term bounce play I am going to watch, especially if mega caps start coming in after the open. The high of 247.10, it starts breaking above this high. With cycles at the bottom, could be a percent buy B bounce. So intraday, that high means it could be something, but it needs a follow through into the close. So that's the only minor, let me stress, minor bullish pattern on Tesla. Nvidia, still watching for the bounce up here and then the rollover play. Just looking at some of these mega caps real quick. Apple still holding very key support. So you start breaking below 173.50, as I said yesterday, that will not be good. Other than that, this is a triple bottom on any Apple bounce. I'd be looking for a return to 179 possibly. But again, these aren't the strongest plays in the book. This is not a double on Microsoft. Okay, how do we look? How do we verify that? Because you could say, "Oh, this is the bottom, peak, bottom," but no. Go to the other time frame and you see, does this resemble a double at all? No, it does not. No, it does not. That's where checking multiple time frames for confirmation, even though it looks right on one time frame, you can get faked out because this is not a valid double on that 4 hour. Little stuff, something I want to bring up. But also cycles, we've got a lot of daily cycles at key lows and a lot of these key things holding support. So we've already chipping away at support, but easily we could see this mega cap bounce before the next rollover play. Good morning, Martinez. How do you personally trail a rapid rise like URA? Uranium? It depends on your time frame. Something that we've talked about this for a long time. Trading around a core position, broke above 24, and look, we've had the thing closed above the 62.5. So this is where, if you're like, say, only in it from the last couple days, I'd be looking more around, it'd have to at least hold 2660 to 2680 on a closing basis if I was only in it from this little bounce. This is where you got to take, this is why I can't give specific trading advice. Because if you've been building a core position, or let's say you saw it a couple weeks ago, close above the 62.5, and you then said, hey, I'm going to buy a little pullback, or you've been in it on a breakout play above this multi-top area back in August, then I'm going to give it more room. Why? Because the next major target's the 29.86. All right. So, and then, this gets real interesting. If you get uranium breaking above this 30 area, it could be in for a run. So if you're going for a much bigger target on uranium, like let's say you're even like 38, let's just say the next harmonic, which was a pretty key resistance area, then I'd be giving it more room. I'd be giving it a lot more room. I would not be crowding a stop at all. My stop would be back at 24 or below to give it room. So that's how do I handle a rapid rise? It depends on your time frame and your duration of your trade. Too many people try to lock in short-term profits and give up the longer-term move because you see how long a base this is built. Okay? Now, there's no guarantee. It could stall out again. But when you get a solid base, look, you were back at August of 21, January of 22, June of 22, October of 22, December of 22, April, starting to take off in May, building some higher lows, and then boom. I don't want to, I'm going to try to lock in $2 or $3 and possibly give away 10 to 20 bucks. Hope that so. You got to have your trading plan. If you're just trading this on, hey, I'm just trading this on the little daily, pull back to the rotation zone. And is pounced up like this, I'm going to be more aggressive. It's not a long-term trade for me then. Hey, this is a short-term trade. I'm going to trade it as a short-term swing trade and especially start watching for a topping pattern on a shorter-term time frame. Does that make sense? You're welcome, Options 22. MJ here, you can use the harmonic retracement levels, the weekly rotation zone, close below key levels would be concerning. See, MJ's coming in with some good information. All right. Hey, Alan. I don't know when I'm doing evenings again yet. So, That's a little, and that doesn't just matter on uranium. This is know your time frames and your durations. Don't mix up. This is where people will also, and then we're going to go into the open. They'll take a short-term position and it'll turn into a loser, and they'll turn into, well, now it's a long-term position. Oh, well, I'll just carry it until it recovers. That's not a good strategy. And know your time frames and know how to trade your time frames. Don't mix time frames. Let's just take a look. The spiders, see, you're going to have a valid double. Spiders, I'm just checking this. The Qs, let's check it. Let's check it before we wreck it. Huh? Look at that. Did it get there? 356.87. 356.86. The Qs qualify. There you go for all you Q traders. That's how we do it here. Doesn't mean it has to go up. Still a long way from triggering. But that's how we do it here. There we go. All right, with that, I will talk to everyone later. Hope you have a wonderful trading day. Bye for now.